So everything that you have been taught about trend lines is keeping you like one step behind. So most traders, they use the trend line and then they wonder why they just keep getting stop out, right? The ones who actually make money, they use two, right? One for the direction, one for risk management, entry and exit. So by the end of this video, you will have that complete system. And that shift alone could change your next 10 trades. Okay, so look at this chart right here. Price broke the downward trend line, right? So the stop loss on the opposing trend line, as price moved higher, the stop, it trailed to break even and then into profit itself. So there is no white stops. There is no like guessing where the exit is. The second trend line managed the entire trade from the start to the finish, right? So this is exactly what I'm breaking down in this video itself. Let me show you how. So we start by identifying two trend lines on your chart. One upwards, one downwards. The upward trend line, it connects the higher lows, right? The downward trend line connects the what? The lower highs. So together, they create the structure on the chart that tells you two things: where the market is likely to go and where it is likely to stop. So you are not like picking one or the other. You are drawing both and then you wait. So you wait for price to break one of these two trend lines. That break is your signal. The moment price closes beyond one of these trend lines, you are now in, right? You're now in the game. That is your entry itself. All right, so now here's an example. Price breaks the downward trend line to the upside. So that tells us what? That the buyers have now taken control and the market is likely to be what? Heading higher. So we are now looking at an opportunity to go long. But here is the key. Your entry is not like the only decision that you need to make right now. No, you also need to know where you are wrong before you get in. So for example, this is where the second trend line it now comes in. Your stop loss, it goes to the other side of the opposing trend line. And in this case, the upwards trend line itself. So if price comes back down and breaks that upward trend line, the trade is now invalid, right? The setup is no longer there. So you now exit and you accept the loss itself. All right, so now the opposing trend line is not like just a line on a chart itself. It is your defined risk level. So before you enter the trade, you know exactly where you are wrong and how much are you actually going to be risking, right? So after over 20 years of trading and training like thousands of traders itself, this is the single most overlooked piece of risk management that I kind of see across every level itself. Now, here is where the system, it now gets even more powerful. As price, it now starts to move into your favor itself. This is where you trail, right? You trail your stop loss to break even, right? So you drag it up to the level where you have entered. The worst case scenario is what? Is to close the trade back at zero. You cannot lose money on this trade anymore, right? Because this trade is now free. The risk is gone. So from this point, every pip that price moves into your favor is now completely, right? It's now pure upside. So now, as price continue pushing higher, this is where you trail your stop loss further, right? You move it up again. This time, you are now actually locking in actual profits itself, right? So now, if price reverses and breaks the opposing trend line, you are now not stop out at a loss. You are now stop out in profits itself. So the opposing trend line has gone from being like your risk level to now being your what? Profit protection mechanism itself, right? So the same line that defined your risk right at the start is now securing your gains at the end of the trade itself. So when price finally breaks that opposing trend line, this is your exit signal. You close the trade, you take your profit. There's no like, in a way, like arbitrary target itself. There's no guessing, okay, where should I get out? That kind of thing. This is mechanical, right? This is not emotional. This is now mechanical. The trend line tells you to get out. As a quick note on the time frames itself, the 4-hour chart is a solid execution time frame for this system itself. It gives you what? It gives you enough structure to draw clean trend lines without the noise of the lower time frames itself. That is like, it could be like clouding your actual read on the market itself. But the concept that I just showed you, right? It works on any time frame. right? It works on any time frame that you prefer to trade on. But knowing when to enter using the 2 trend line system is only half of the game itself. The other half is knowing exactly where on that trend line the highest probability reaction is going to happen. And that is what we're going to cover next. Real quick before we go on, you know, most traders, they skip practice and they go straight to live trading. And that's how you blow accounts. So XM, they fixed that. They let you trade in real market conditions using virtual fund, and they have turned it into a competition where you can actually win real cash. So they run 3 competitions. The first one, the demo weekly. There is no entry fee. You trade risk-free for a share of 25,000 in cash prizes across 100 winners every week. And then what? There's the daily arena with a $5 entry fee, and you are competing every weekday for a prize pool that starts at 1,000 and grows to 5,000. So there are 10 winners per day. And right now, they are running a third one, the Crypto Arena. So this month's featured competition. So it's the same $5 entry, prize pool guaranteed at 1,000 and growing up to 10,000 based on the participation itself. And here's the thing, this isn't new. XM has already run over 100 of these competitions, right? They have paid out more than 1.5 million and they have produced over 2,500 winners. So you practice, you compete, you get paid. And that's how you go live ready. So go check it out. Links in the description below. Alright, so now you have your 2 trend lines now drawn. Your system is now in place. So the next question is, where exactly on that trend line do you want price to react? Because why? Not every touch of a trend line is worth trading itself. The ones that are worth trading are the ones where your trend line emits something else. We are not just going to be talking about the break of trend line right now. We are now also talking about the rejection at trend lines itself. Cool? So what we're going to do, we want to find an area of high convergence itself. It is the point on your chart where price it now intersects with what? A key level of that is what? A previous support that has flipped into resistance, right? A swing high that has been what? Tested multiple times. A level that has been respected repeatedly, right? So now, when those 2 things, they align at the same point itself, your trend line and the key structure level, it now aligns. You have found a zone that traders from, let's say, completely different styles of trading, they are now watching at the same time itself. Some are watching, let's say, the structure levels. Some are watching trend lines. Some are watching price action signals. So all of them are now focused on the same area itself. And that concentration of that point is exactly what creates all the high probability reaction at that point, right? So here's the critical thing. You don't just enter just because price reaches that zone. No. Price can still break through any level, no matter how strong it looks. What you wait for is price action confirmation inside that zone itself. So a candlestick signal tells you that price is genuinely rejecting the area. So not just touching it, for example, an engulfing candle itself, right? A strong momentum close in the direction of the main trend. Something that shows what? The buyers or the sellers, they have now stepped in and they are now defending that zone, that level itself. Now, here's the layer that most traders completely miss. Even when price reacts at a high confluence area, a high convergence area, you still need one more confirmation. Because at this moment, the primary trend, the main trend, and your secondary trend, they are in conflict. They are in 2 different directions. Your primary trend is the bigger direction. Your secondary trend is the short-term move that brought the price back towards the conversion zone itself. Until that secondary trend, it breaks. The primary trend, the main trend, cannot continue. So what you do is to draw a short-term trend line over that secondary move, that pullback itself. When price breaks that short-term trend line, now this is your confirmation. The secondary move that is heading up is now over. The primary trend, the main trend, is now resuming. That break itself is your entry signal. Alright, so now here's how it all comes together. The primary trend is a downtrend. Price pulls higher into your area of high convergence. When the trend line meets the structure level and price shows rejection in that zone, you draw a short-term trend line over that pullback itself. When price breaks it, the secondary uptrend is now over. So the primary trend, it continues. That is your entry. Not before, right? Not at the point where it just touches the zone, but at the break of that short-term downtrend, that short-term trend line. This is where it confirms that the move is real. Alright, so now let me show you exactly how this plays out. This is what you're going to see, where the full reversal can come in. So what if the trend line itself breaks and the trend is now about to reverse the direction entirely? Here's the thing. The problem with trading reversals is that a trend line break alone is not enough. Most trend line breaks, they are fake outs. So price may poke through it and then it snaps back right away. Before you consider a reversal trade, an actual, for example, the primary trend from a downtrend to an uptrend, you need to see reversal price action pattern that is forming right before the trend line break itself. Here's what it is. The pattern that you want to see, for example, it could be what? A double bottom in a downtrend itself. Now, this is powerful. It could be an ascending triangle, that sort of thing. So, but here's what it tells you. Price tried to make lower low. It failed. It came back to the same level and it couldn't break below it. So that failure is a loss of momentum, that the sellers are now losing control. So when that double bottom, it forms at a key structure level, the one that is also intersecting your trend line. So you now have a high convergence area for a reversal itself, because that is a double bottom neckline already. So here's the thing, the sequence is now this. You got a downtrend that is in place, the double bottom, it forms at a key structure level. That structure level, it intersects the trend line. So it gives you your area of high convergence. Then price confirms the reversal signal at that zone itself. Here's the thing, you now zoom to the lower time frame, the 1 hour time frame, to what? To find a more precise entry. So on the lower time frame, you can see consolidation that is formed at or around the convergence zone in way more detail itself. And this is where you can enter. Your entry is when price breaks above that consolidation. So when price closes above it, the reversal is now confirmed. This is your entry point. Your stop loss, it goes where? If you want to be safe, you can go it below the double bottom low, just in case price dips below. And then your take profit can be at the next key level above. Cool? Right, so now here's what it all comes down to. Most traders, they only draw one trend line and then they hope that when it breaks, it's going to be good. Advanced traders, they use two. And then, like what I showed you earlier, right? And then they let the lines itself manage the trade for them. Not just on your entries, but also for your exits, right? So that is the difference, right? And then what? We dig deeper to find the exact execution, reaction zones, right? By adding all the high conversion zones itself and more. So that is what? That is just one piece of what separates, in a way, consistently profitable traders from everyone else. So keep watching, keep applying. The difference is going to show up faster than you think, right? So stop drawing trend lines and start trading now with a system itself.